Let's stay on big tech and look at Netflix because they report after the closing bell this afternoon. Jeff Carbone is with us, Cornerstone Wealth guy. Jeff, would you be tempted to take a flyer and buy Netflix ahead of the earnings report?
You know, right now I think that's a little bit of a shot in the dark.
Yeah.
I think expectations, they should be pretty good. However, I would say, you know, they've got to increase their subscriber cost. Not a bad thing, should be for their bottom line. However, I'm going to be really looking for how many subscribers they have. And then also with the increase in their cost, what kind of new streaming opportunities will they bring along? What new programming will come? They're getting a lot of competition from Disney, AT&T, and Google and others. So it's going to be interesting to see what the reports come in.
You know what, Jeff? The competition doesn't have Netflix's technical expertise. They can drill right down on the individual and suggest what you might want to watch. I don't think any of the other streaming services have got that. I think Netflix is the clear winner here.
No, they've got great content, a large subscriber list. They have also got the technology. They're like, I think you would call them, and I think earlier you were talking about, they're a technology company. And I think with the dislocations that we've seen in the market in December, now it's recovered pretty strong. And earlier you mentioned also Netflix is up 50% from the lows. I think there's going to be opportunities. Volatility is not going away. I think we'll have some opportunities to buy back in a little bit more to Netflix and some of the other FANGs that are out there. But technology is it's definitely one of my sector picks for this year.
Got it. Now, you say, I read your stuff, the U.S. consumer is in great shape. I'd agree with that. So do you like retail stocks? And if so, which ones?
Yeah, I would say more on the consumer discretionary side. So we could see that shift in the millennials towards experiences. So we do like some cruise lines. We do like some of the you mentioned some of the Amazon, some of the some retail. Probably more in a ETF or a mutual fund would be a bigger pick. I'd say what we've been doing is really trying to build the balance for 2019 with our clients between controlling the market optimism that we have right now versus it being a little bit more defensive, because we certainly had a big sell-off, which we thought was overdone in December. So I think it's finding that balance with some high-quality stocks, larger companies, and if you could find some with a nice dividend, not a bad thing to be owning right now.
I love that dividend. If you can find me 6 or 7%, and it's guaranteed, I will take it. Okay. Thanks very much indeed, Jeff. We'll see you again soon. Thank you, sir. All right.
Thank you.